before. Hope you guys have been having a great time with learning binary alpha and starting to get a little bit of understanding. I know we are just in the beginning of this class, but hope you guys are starting to get a better understanding of market momentum and what binary alpha is all about. Today's class is called Understanding Trend Reversal, and this is a class that will help us to maybe get a little bit more confidence in taking certain types of reversal trades when it comes to fifth and seventh logic. But really, this is a good ground level overview of part of the market structure and how the market works and kind of the ranges of the market. Okay, so trend reversal. Why do we need this? Why do we need to understand about trend reversal? Well, one of the reasons is that it helps us to understand barriers in the market better. There are actual barriers in the market, and this type of information will definitely help us to understand what those market barriers are and figure out kind of the ranges of the market. It also will help us to have a better understanding of fifth and seventh logic. There are smaller ranges in the market and there are larger ranges in the market. And when the market reaches those potential ranges, there is a better potential for valid fifth and seventh logic for the market to reverse at this point. So we will talk a little bit more about that now, and then throughout the upcoming weeks, as we specifically talk about fifth and seventh logic, we will dive a little bit deeper into those things. Understanding trend reversal in some parts can give you a stronger and better confidence of valid seventh logics in particular. If you go back and watch season 4 class, the class about trend reversal, Kanji does a really great job of showing a trade that for him is 100% accurate trade on a valid seventh logic. That if he really needed to recover anything, that's where he would go for his recovery at. So this is something that can give you a better confidence of really recovering when you've lost a few trades in the market. And this will also again help us to pre-plan our reversal attacks on the market, just as we talked about pre-planning bonuses when there is certain market structure. This will also help us to pre-plan the reversal attacks on the market, especially when it comes to seventh logic. Okay. So what are some of the other reasons why we need to understand about trend reversal? Trend reversal helps us to see the range of the market as well, and when the market has a very good chance to reverse. So, we see these tension line indicators that we have on our charts, and I'm going to go and draw a few just so that you can understand that. The indicator really shows you most of it. But the tension line indicator actually only looks back over the past 2 days. Well, sometimes the range of the market is outside of what happened in the last 2 days. So in this example, let me go to a chart here. We have Australian dollar, US dollar here, AUD, USD as we call it. If you look at this day's chart, normally our tension lines will draw whatever the range of the market. The range is the highs and lows of the market. Whatever the range of the market was for the past 2 days. So say here, this is our current day from this dotted line until this dotted line. We would be looking at these 2 days to try to find the market range. But we have a low market range that this would stuck within. But when this candle here stuck there, and it actually reverses from those price points. And again, these are a lot of this is based upon our a lot of these a lot of this is based upon our um, our tension line indicators that we have. Okay, so let's look back at our presentation here. Okay, again, if there is no left structure for the last 2 days on the chart, then we need to look at the extremes of the market, either in the so you can go to the 1 hour, but you can also go to the 4 hour, the weekly, or the daily charts to see where the market may try to break or reverse from. Okay, so in this instance, we don't have anything the past 2 days. Looking at this chart, the same up here. Once this comes here, we don't have anything for 1, 2, 3, 4, 5, 6, 7 days. So sometimes we can come up here and click on our H4, and this just gives us a little bit better range of the market. You see, I've highlighted these areas on the 1 hour chart. I've highlighted some of these ranges on the 1 hour chart, and when we go to the 4 hour chart, you can see them as well. These are some of the swing areas. See how the market goes up and down and swings up. Here's a high point. Here's a low point. Here's a high point. Here's a low point. These are the ranges of the market. These are the smaller ranges, and then the larger ranges are the actual highs and lows of the market for the entire day. And so here on this day, our high, or sorry, this is another day. On the 1 hour chart here, our low of the market on a day like this is down here, and then our high of the market is these places. So this just is about helping you to understand what the range of the market is and what it means. And if you understand the range of the market, you can understand better where the market has the potential to reverse from or have a breakout and get some bonuses. Okay, so examples there. So why tension lines? As we said about tension lines, we look at those because they give us the ranges of the market. They give us the potential swing areas of the market where the market has the potential either to break or it has the potential to reverse from. See, tension lines don't mean reversal points. Tension lines mean almost like a battle line. Here is a place where the market is going to do battle at. And if there's a strong enough market maker, if there's somebody or some large bank in the market that has the strength, then they can push. Strength means they have enough money. They can push the market in their direction past these tension points. Or sometimes news can do that as well. But so it can happen that, again, a tension point is not a reversal point. A tension point can be a place where you can see both. You can see either a market reversal or you can see the potential for some bonuses. Now, when you get to the extremes of the market, like when you break past the high in the last few days and you see the next range, so here, the market broke here. So again, we're looking at this day here, okay? Looking at this day, and these are the past 2 days here. Okay, I'm just going to mark these lines here. These are the past 2 days, okay? Actually, I can draw this here with here's one. Here's 2 days back, okay, and then here's 1 day back. So this is our current day here, where I've highlighted. Okay, so we have 2 days back in the market. Once the market breaks through the extremes of the last 2 days, so the market is in this day in this structure, this big candle here breaks this high of the past 2 days, then there has to be another position that it's going to go to. There has to be a range of the market. And this is our next position. This is our next position where there's the potential for the market to either break or reverse from. And as you can see here, you can see my lines here. broke this extreme here pretty early on. So right here, if we break the previous day's high, the next range of the market, zoom out so you can see this a little bit better. The next range of the market is actually here, these pins. So this is a range where the market came up, and the swing of the market is swung up and then swung down. Okay, this area right here. Let me just highlight this area in yellow so the color is distinguished. Okay, so this pin swing area right here. Let me zoom in a little bit so you can see what I'm talking about. Okay, so right here, you can see there was a large pin. There were these two pins. The market swinging down and then it swung up. Okay, so this is a potential place for the market to either reverse from or break through and cause a bonus run. And then right here, this is the next potential high of the market. Okay, so we come back to our current market day. As you can see, I drew a line. I drew a line from this swing point to this. I just drew this line out where the price point was at. Okay, and here's our current market day. One of the ways you can find this easily on your chart is to come over here and grab a vertical line and draw a vertical line here on the hour that you're looking at. And then you come to your 1 minute chart. Okay, come to your 1 minute chart, scroll back to where it hits, and you see, okay, here's the 1 hour. This blue line is my line where I'm looking for either a potential bonus opportunity or I'm looking for the potential of the market to reverse. And look what we have here, a very, very nice potential balance 7 logic scenario. Okay, so we have a really long flag candle sequence. Again, for me, in a scenario like this, I probably would not go for bonuses because it is reaching a market extreme. I'm looking for a potential 7 logic here. Okay, we draw our trend line out here. As you can see, this is actually a good trend line because the market comes down to the trend line and bounces off of it. Okay, so we have a break here that happens. We see really large pins. We're staying out of the bonus run. We know we are at a market extreme, and this is like a tension line for us, this blue line here. And the fact that it's able to break back through, we have 1 loss, 2 loss, and the fact that the second loss here, so we have 1 loss, 2 loss. Okay, the fact that it's able to break back through our tension line here, and we have a lot of space to go in the trend line here, shows us that the market has a lot of space to come down. Now, sometimes what Kazi will do, just for some extra confirmation. Now, here in a place like this, because you are at an extreme of the market, it's like an extra confirmation that, okay, the market wants to create a 7 logic here, the market wants to reverse from here. A lot of times what Kazi will do is, instead of going in immediately for a valid 7 logic, he waits until this gray candle here, okay, this gray candle here can break the Kazi high low and break these pins here. And as soon as it starts doing that, he where the market has either the potential to break or the potential to reverse. The market always has a range. That's very important for us to remember. So again, we look back at our 1 hour chart here. The market always has a range. It always has a place that it is trying to go. We see here that the market was coming up, and the range of the market was this high point here. This was the high point of this day. This was actually a high point for multiple days, for 1, 2, 3, 4, 5 days. This was the high point, the range of the market. Okay, and the market came up here and it reversed from this point. If there was a good flag candle at this price point, then more than likely you had a good valid 7 logic. Now again, I'm not saying this is the only place valid 7 logics happen, but what I am saying is these are some more confident places for valid 7 logics. You also have um, smaller ranges of the market as well. Okay, so say I'm in this daily market. Let me zoom in here. Say that I'm in this daily market where it's going up and down, up and down. Some of the ranges of this market are places like these pins that are here, these high pins, or maybe some Kazi high lows, or the swings of the day. So here, for instance, here was a kind of middle swing of the day. Here was a lower swing of the day. Here's where the market came down to swing up, swing down. And in this middle price here, you can see a W structure. As the market broke through it here, there were probably a lot of bonuses there. But at the very same time, it also could have happened where it came up and reversed and made a valid 7. Okay, so there are daily market ranges that you can see as well. Hopefully that gives you guys some clarity on understanding trend reversal. One of the other key points is that there are what we call market makers. They're actually banks at a lot of these price points where, let's see, we were just talking about, maybe there's a bank here, I don't know, Bank of England or something, that says, okay, if the market comes here, we will sell strongly. We will sell Australian dollar, US dollar. And these are what are called anchor points in the market. The ranges are actually anchor points where a bank kind of sets up shop and says, okay, this is a place in the market where we want to sell from or we want to buy from. And these are important to remember. And again, this is kind of the why behind the what. We always ask, what are we doing? Well, we take a valid 7 logic. Well, why? The reason why is because sometimes a bank set up shop here. They set up an anchor point in the market, and they said, okay, once the price comes here, we know we can push it down from there, and they did. Whatever bank or really large player was in the market here, within the forex market, when the market reached this price point, they were able to push the market down for 1 to at least 3 to 3.5 hours, and that was probably plenty of time for them to get in and out of the market and make a lot of money for themselves. Again, that's the forex market makers who actually are the ones, along with news and some small retail traders, who actually create what we are seeing in front of us in the binary options market. Okay, and that's what helps to create our logics in a way. Also, just a reminder, again, tension points are not always reversal points. They are more like battle lines in the market. So imagine, we have these lines here. Look at our 1-minute chart again. And these are not always reversal prices or reversal points in the market. These are like battle lines. This is where the market wants to fight somehow. And whoever is stronger, whatever bank or market maker is stronger at this price point, is going to determine the direction of the market at that point. Sometimes, we see stuff like this where the market pushes down and pushes down. Maybe there was one market maker that wasn't as strong here as this one here that was pushing down. This one was able to make a little money here, but then this other tension line, another market maker, another big large bank here says no. We have more money. We're going to push the market up in our favor here. And this is what creates the ebb and flow of the market. These M and W patterns, just how the market momentum flows, is these points in the market where, again, large Okay, so I hope that makes some sense. Hope you guys can understand that. Again, this is just kind of like a big picture view of the why behind the what, of why we get reversals in the market, and basically how Cousins is able to understand the seven logic scenarios. In a setup like this, you have some bonus runs here, but after it gets done, even though it was able to cross an attention area in the market still ended up reversing from there. There was not enough momentum in whatever market maker pushed the market up to keep it going up above whoever this was here. This was a very, very strong um, anchor points for some things, and they were able to push the market down for a really long time. Again, to get the market in their favor and to be able to make the money that they wanted to make by having a selling price point there. Okay, a few more key points, and then we will be done with this class. Large news events, which can happen almost daily, can also push the market to the most recent daily extremes as well. If you don't know how to, we don't really care so much about the news when it comes to trading binary alpha. We can trade binary alpha in any setup, in any situation, so we're not worried about the news. But just so you can, again, understand the why behind the what, why does the market sometimes range really far, really quickly? It's because of large news events. And you can actually go to a couple of different websites to see the current daily news events. There's one here called forexfactory.com. And on the front page here, this will tell you some of the news events. Today is Sunday as I'm recording this, so there are not many news events. But you can look here on Monday. Anything here that is in red is going to have a strong impact on the market. So the market will move strongly in one direction or another if the news is strong one way or another. Another website that you can go to as well to see the news as well is this investing.com. You look at their economic calendar, and you can look here as well and see some of the news events. What they instead of a red folder, they have these three bulls. If an event has three bulls, then it's considered a strong volatility event. You can see down here. So it just gives you a little bit of understanding of maybe why the market ranges sometimes in the way that it does, because of these large news events. Also, in spots like this, we can be even more confident. Again, as we said in our valid seventh logic, it's extra likely to give you a valid seventh logic with the right market conditions, just like it's very likely for you to see a bonus run when you have a breakout like this. This candle was able to break through the high of the previous 2 days. More than likely, there were some nice bonuses in there. In the same way, if the market gets stuck, like it did here at this high, you have a lot better chance of seeing a valid seventh logic. Again, what this does in the end for all of us is it helps us to become more of a preparation type trader rather than a reactive trader. We can prepare in advance for where we want to attack the market, and we can draw some lines out manually for ourselves and say, okay, at this point, I'm going to look for a potential bonus run or a potential seventh logic type scenario. So, just to kind of end all of this, some market conditions are better for bonuses, and some are better for fifth and seventh logics. It all depends on the 1 hour structure. That's our key thing for all of this, is the 1 hour structure is the most important thing for you to look at in binary alpha, and it's the most important thing for you to understand. One of the things that Kazi told us over and over again in all of these seasons is look at your left structure. Look to see what is happening in the left structure of the market. If there's wide open space, then when the market breaks, it may have the potential to give a lot of bonuses. A lot of, if there are good flag candles here, again, it does not guarantee them. It does not guarantee a good flag candle, but the potential for the market once it broke here to get bonus runs is a lot stronger than in some other places. And actually, here again, we had 1, 2, 3. This was the 4th hour in a row of the market moving in the same direction. So we were also in a trending market here. So in a place foundation